On Wednesday, April 29th, spot gold prices remained weak following yesterday's plunge, hovering around $4.585 as market sentiment turned extremely cautious ahead of tonight's Federal Reserve Fed interest rate decision. The deadlock in the Middle East and the shock of rising energy costs have become major obstacles for gold. While Iran proposed a new maritime ceasefire plan, it was met with a cold shoulder from the U.S. for failing to address nuclear issues. Furthermore, the UAE's withdrawal from OPEC has pushed oil prices firmly above the $100 mark, triggering intense fears of a global secondary inflation wave. This super week reaches its climax as investors breathlessly await Jerome Powell's farewell press conference as Fed chairperson. While interest rates are expected to hold steady between 3.50% and 3.75%, there are growing concerns that the Fed may deliver a more aggressive hawkish guidance in response to surging oil prices. From a technical perspective, bears maintain absolute dominance on the daily chart. The RSI has dipped near the 30 oversold threshold, signaling depressed short-term sentiment. The MACD green histogram is expanding rapidly, with the signal lines accelerating downward in a dead cross. Meanwhile, the KDJ indicator is showing severe stagnation in the low range. Although there is a technical need for an oversold rebound, the upward momentum remains weak. Immediate overhead resistance is seen at $4,645, with further resistance at yesterday's broken level of $4,698. On the downside, key support lies near today's low of $4,555. If this level is breached, gold prices could slide towards the $4,500 psychological barrier, or even $4,440. Overall, the gold market is currently caught in the crossfire between inflation anxieties and high interest rate pressures. A short-term bottom will depend heavily on the policy direction signaled in tonight's meeting. The above content is for reference only and does not constitute investment advice. Any trading based on this is at your own risk. Please subscribe, like, and share. Thank you for watching.